Let's talk about the retail investor. Investing activity has been growing exponentially, with retail investing flows rising by about 50% from 2023 to early 2025. That's according to new research from JP Morgan. From meme stock frenzies to the expanding influence of social trading platforms, retail investors are no longer on the sidelines. They've become a powerful and disruptive catalyst. Joining me now with more on how retail investors are redefining market power, we've got Dan Ives back with us, Wedbush Securities Managing Director and Global Head of Technology Research, known for his bold outfits, as you can see, and big calls. And we got Eric Jackson with me here, EMJ Capital founder, president, and portfolio manager, and leader of his self-proclaimed open door army. He's become a retail expert as well. Guys, thanks so much for being here. And obviously, we've seen a paradigm change from the financial TradFi, as we call it, traditional finance industry, towards retail investors. It's become sort of more accepted. They've been more courted. But Eric, I want to start with you. What do you think that traditional finance still sort of misunderstands about the power of that retail investor?
I think the retail gets a bad rap. I think the perception is they're stupid, dumb money. I mean, that was the name of the movie from GameStop. They think that they're going to lose their shirts. They think Wall Street thinks they know better. They think to protect the stupidness of retail, they should just pile into ETFs, pay a few bips to Vanguard and in the S&P 500 and not even try to kind of find these outperforming stocks out there. And when they see certain stocks rise and go up 100%, 200% or whatever, they immediately don't trust that, and they sort of talk it down, and they want to lump Open Door as a so-called meme stock, which is sort of trashing the company. It's sort of like a put down on it. So I think there's a lot that Wall Street misses. Retail doesn't miss it, though. That's the point. They are a lot smarter than what they're given credit for.
Well, and it's also interesting because we have seen some executive teams at companies start to try to explicitly court those investors more now. Do you think that's the right move, or do you think we're going to see more of that?
Absolutely. I think Alex Karp, and Dan knows this. I mean, he set the bar. I mean, he really, he was first really out there with video earnings calls. He was taking questions from retail on the earnings calls, treating them as importantly as he was the sell side analyst, and thanking them and kind of acknowledging them, which is really oftentimes all that they want. That sort of recognition and appreciation. And but obviously he had a great company. He is a great master communicator. So you can't separate that as well. I mean, just courting retail is not going to do it. You've got to have that underlying story to go with.
Sure. Dan, I'm curious what you think, right? Do you think that there are still things that are sort of underappreciated and misunderstood about the retail investor? Because what Eric is saying is true, but there has been some progress made, I think, since the sort of meme stock explosion at the beginning of the pandemic, for example.
Yeah, look, I think Eric makes great points, as he always does. And look, the reality is that retail investors used to be at the little kids' table at Thanksgiving, and you give them a little cookie. Now they're at the adult table. They're front and center, because if you look from Palantir to Robinhood to Tesla to so many other examples, I mean, everything Eric's doing on Open. Look, this is a very important investor class that's very informed. And I'd say some of the best conversations that I have on many names are with retail investors. I mean, there are many retail investors that understand Tesla better than institutional investors in terms of the autonomous robotic future. Palantir, right? I mean, you go back to early days, the believers in retail. Institutional, they laugh, when this stock was a teenager, and then they're crying when it turns 100 and screaming from the mountaintops, 200. My view is it's institutional and retail, but you have to pay attention. Retail has become just a force in this market.
Dan, I'm curious if you have an anecdote or if there's a particular retail investor interaction that you've had. I mean, you travel constantly. Is there a particular interaction that maybe stands out to you that is particularly memorable to you in your recent travels?
Look, I would just say that, like, when I'm, traveling around the world, you realize, like, retail investors will ask questions that usually maybe only the most sophisticated institutional investors would have asked 2-3 years ago. And I mean, there were some moments, like, I'm sitting in Thailand and Korea, and meeting with retail investors that basically have theses on Palantir and Tesla and Open and many other names that are, those are not meme. We're talking about sophisticated investment thesis that they've built, and their investment clubs around the world, social media. If you look even on Palantir, there's many that have been well ahead, and I think have had spread, really spread the message.
Let's take a little bit of a step back. Eric, for people who aren't as familiar with you, yes, you sort of have gained some notoriety this year for your advocacy around Open Door. But for people who are not familiar with your background, I mean, you've been at this game for years as a hedge fund manager and as a sometime activist. What happened this year? What changed for you that brought you to this point?
Well, I've always been a tech investor, and but earlier this year I decided, hey, one of our biggest successes at my hedge fund in the last couple of years was that we got into Carvana a couple of years ago, early on, after it had dropped from $400 to $3.50 in December 2022, and then it sort of started this road back, and they recently eclipsed $400 again. I got in at $15. Our AI model flagged it at $11.
Eric's paying for dinner.
So basically, earlier this year, I was meeting with our engineering team and saying, hey, we got to do more of this. We're building all kinds of different models to do predictions on earnings events and all this. Let's just find more 100 baggers. And so that led us to discovering Iron and Cypher earlier this year, sort of when they were like $9 and $3, still seen as Bitcoin miners, sort of not as sort of next gen AI, HPC,
Neo cloud, if you will.
Neo clouds, yeah. Right. And then from that, I noticed immediately the retail responded to that, and this notion of the next Carvana, I missed Carvana, I'm not going to miss the next Carvana. There was definitely FOMO out there. People were kind of bored of the Mag 7. They were just sort of looking to go out further on the risk curve for sure. And then a lot of people were asking me, hey, I remember Eric you used to talk about Open Door. Whatever happened to Open Door? And that sort of sparked my reinvestigation of Open Door. They were like 50 cents at the time. They hit a low of 51 cents in June of this year. I got in the 70 cents range, and then went public with my thesis in mid-July in 80 cents, sort of high 80s, 88 cents or something like that. And immediately it took off, and there was just this palpable energy. It was global, sort of to touch on something Dan said. I was getting messages from Mongolia, Antarctica.
Right.
I have there's a crew of fishermen in the middle of the Bering Sea that were out on a 10-week, fishing for cod. Captain Mike of this fishing vessel was on Starlink buying Open, taking all the 60,000 that he had made in the past 6 months fishing and going full portfolio into Open, and encouraging the rest of the Open army. So it's been a wild ride, international, hunger amongst the retail in kind of finding the next big thing, and it's been fun to be a part of it.
All right, well, we're going to just pause for 1 second because we're going to send it over to Ali Canal in the Social Center with some audience questions. I don't know if Captain Mike is writing in and asking any questions here today, Ali, but who do we hear from?
From our Yahoo Finance social media audience, and this one is from Benjamin, and it's for both of you guys. He asks, what investing knowledge have you given away for free that people just don't seem to listen to? Eric, we can start with you.
Well, I think most people do listen when I try to give advice. I would say, one of the things that I've been trying to stress with retail, and I struggle this with myself, is controlling your own emotions as a trader. It's one thing to have this sort of, thesis that Open Door is going to 100x, right? But that sort of masks the volatility that you live with, day to day, week to week. Sometimes there can be massive drawdowns. Open right now is on a big run since earnings of last week that we're seeing as successful. So it's been up every day since. But before that, it hit a peak of almost $11, and then got as low on the recent market pullback as below $7. And so on those days, I'm constantly flooded with DMs from people saying oh my God, is the magic over? What have I done? Do something, Eric. Tweet something. Make it stop and all this kind of stuff. And you have to teach them that just controlling your own emotions is often the most difficult part of investing sometimes.
Dan, what about you?
I mean, look, traveling around the globe constantly, and obviously from social media, we're transparent. Like, to me, it's really like it's passing it forward and really making sure the information flows there, whether it's for our clients or for retail investors that follow me. I mean, that speaks to like my ETFs. It speaks to everything that I do. What I say here is the same thing I'd say if we bumped into each other in an airport.
Platform that has become a beneficiary of retail investor dominance is eToro, the sponsor of Yahoo Finance Invest. The company saw its assets under administration grow 76% from a year ago to $20.8 billion in its third quarter. It has more than 40 million registered users across 75 countries and debuted on the NASDAQ in May of this year. Let's get right into the future of the retail investor with Yoni Assia, eToro co-founder and CEO. Yoni, I think I just saw you at the IPO down at the NASDAQ.
Yeah, we had a great interview, and it led to eventually us sponsoring this great event.
Well, thank you so much for your support. We have to redo our outfits. Did you see that last segment? That was wild.
Yeah, we need better clothes.
So since we last spoke, look, the Dow is now at a record. Like, what are you seeing in the retail investor community at this point?
I think, we are just at the beginning of, again, the largest transformation of wealth in history, where our generation, Gen Y, and even younger generations, Gen Z today, have discovered that their fiat money devalues over time. Probably, with the widest knowledge of an understanding of inflation, which means that your money in the bank loses its value over time, and you need to invest that money somewhere. And I think people across the globe, here obviously, 60% of households are exposed to the stock market, but in Europe it's 10%. People understand now and are discovering you can generate double-digit returns investing in the stock markets. They're finding out about crypto. 400 million people now are investing in digital currencies across the globe. And I think this new generation talking about their investing on social networks, on eToro, looking at other people's portfolios, which is a unique part of eToro, where you actually see millions of accounts and you see their performance over time from different countries, investing in different stock markets, not only the US stock markets, but global stock markets from Asia to Europe, realizing that if you learn how to invest in the markets and you learn how to compound wealth over time, you'll significantly improve your financials if you start doing that when you're younger.
When you are one of the most passionate founders or co-founders in this game, I've always loved listening to you talk, love the story behind eToro, but for those not familiar with your personal story, when did you found the company? What has driven you to take it to this point? Where did you come from?
So born and raised in Israel, but I started trading when I was 13. And my father was actually CEO and founder of also a NASDAQ-listed company. And we've always been passionate about capital markets. We found the company 18 years ago together with my older brother. And we looked at the world of investing and we said, we need to simplify this world. We need to make it simpler, to open the markets for everyone to trade and invest in a simple and transparent way. That was our statement from day one, 18 years ago, until today, until the IPO. And we're very excited to see now millions of people, tens of millions of people that we've helped access the global markets. And across the globe, we realized it's really about helping people get more familiar with the markets, trust more capital markets, educate themselves. And we did that by building a social network where people can actually see other people, how they invest. Everybody automatically shares by default their portfolios on eToro. So somebody joining eToro from France or Italy or Spain or here in the US can see like-minded individuals and how they're generating performance over time. And then the unique part of eToro is our technology that enables you to automatically copy the top investors on the platform. Because what I've learned across the 30 years in capital markets is investing is simple. You can just buy an S&P 500 ETF.
And go to sleep.
And everybody should learn how to invest in the markets. Trading, on the other hand, it's like professional sports. That you need to invest a lot of time, a lot of effort to become a good trader over time, to beat the indexes over time. And by opening this up, opening a community of very smart investors and traders that can learn from one another, we're actually helping people become better at that professional of trading, at that profession of trading.
Where do retail investors go from here in 2026? What's the next big thing?
Well, I think it's definitely AI. right? We were very early on to crypto. We started buying Bitcoin at $5. Vitalik was in eToro's offices, inspired by our colored coins about tokenization of assets before starting Ethereum. So I think there's now sort of two parallel tracks that have a lot of connection between them, which is tokenization and all assets becoming digital, and retail investors and generally the world of investing becoming significantly more powerful through AI, through intelligent investing. So when I started trading, I was always around, so how do I build software? How do I create algorithms to trade the markets? But it's very hard, it was very hard to create quantitative strategies, to be 24/7, to build the software that can monitor the markets 24/7, what's happening in the markets and manage your portfolio. And now what we're seeing in eToro, we just launched our app store and an AI studio for our investors where they can actually vibe code, so you can just write in natural language. Wow. Basically, and we saw some of these apps that are pro-investors started developing, and they're like, build me the, Warren Buffett and Benjamin Graham, like the fathers of value investing. I want their personas, read everything about them on the internet, and I want Benjamin Graham and Warren Buffett to comment on my portfolio, and I want to talk to them about my portfolio. And then I want to rebalance my portfolio based on their insights. And you can use it, the best investors in the world, because again, AI knows the best investors in the world. It read all of their books and all of their information, all of their memos, and you can suddenly have in your hand of a retail investor technology and power that was available only like to the top quantitative, most sophisticated hedge funds here in New York. Suddenly a retail investor has access to all of that information, data through eToro. So in eToro, when we provide our Tori, our AI analyst, it has access to see your portfolio. So you can ask what happened yesterday in the markets and how does it impact my portfolio? What are other people doing in their portfolios today, right? So it has access to all of that information and super powerful. Now, if you connect AI now to digital assets, which means all assets eventually become digital, smart, 24/7, tradable, right? So capital markets are now copying crypto markets, sure, moving to 24/5, and the ability to become smart contracts, right? So AI can then interact with those digital assets. I think those two trends are gonna shape and completely change financial markets for retail investors over the next 10 years.
Lastly, before you go, you just mentioned Warren Buffett. And if I'm right, you had a dinner at Warren Buffett a while back. Warren Buffett's getting ready to, I guess, go quietly, as he just said as an investor later. In our time, do you think there will be another Warren Buffett?
I think we're seeing on the eToro platform a lot of potential Warren Buffetts. So we've just had our annual investor summit. We met a lot of our top investors from across the globe. One of our top investors went from $50 million copying him to $250 million copying him just over this year. And he's consistently beat over the last 5 years the S&P 500, generating an average of, I think, 29% returns over the last 5 years. The second one with $162 million has generated about, I think, 31% returns in a tenure of 12 years on eToro. So I think you have a lot of great minds out there that are consistently generating returns in the markets. And again, in his letter, he said, find your heroes and copy them. So that's what we're trying to do in eToro, let you find the heroes and copy them. And there's no doubt that Warren Buffett is a hero of capital markets and educating people about capital markets.
Well said. Yoni Assia, eToro co-founder and CEO. Above all else, thank you for the support of Invest. I've always enjoyed following your story. I enjoy following your company, and I greatly appreciate it.
Thank you very much.
I was going to go off on a different direction this interview, but I got an alert from Yahoo Finance. There's a story on our page right now saying you are delivering money to people's houses in partnership with GoPuff. Explain it to us.
Hey, Soz. Great to be with you. So we're launching a service, Robinhood Banking. It's rolling out to external customers right now. Early feedback seems quite good. And the idea is, can we actually give you the private banking experience? So the same type of experience that a high net worth individual would get from a private bank, but with the digital experience they've come to expect from Robinhood. And as we started thinking about the types of features and services that the high net worth individuals would get, one of them is they're not going to an inner city ATM. They're getting cash delivered to their house. And surprisingly, even though we're getting increasingly digitized, cash is still a very important part of the US economy. And people need it from time to time. And when they need it, we want to deliver it to them with the convenience they expect from other digital services. So high net worth individual gets cash delivered to their house in a truck. We figured out how to do that in partnership with GoPuff to the mass market.
Vlad, how does this?
And that's just one of many features that I think make Robinhood banking the best solution for customers.
Vlad, how does this come? Well, I haven't, full disclosure, I've not used this yet, but I'm curious about it. How does this cash come? Is it in a bag with a dollar sign on it? Like, how's it packaged? I've never had cash delivered to my house, is what I'm trying to say.
Yeah, we don't want to just deliver it to you in a shiny bag with a dollar sign. I think it's a little bit more discreet than that. Gotcha. But actually, one of the initial markets is New York, so I encourage you to give it a try.
Fair enough. Look, one of the benefits of doing an event like this, we can actually get in depth into your story, the story of Robinhood. Take me back to the 1997 Infiniti Q45, Vlad.
Well, that was a very nice car. It was a boat of a car. That's a deep cut. So I was a graduate student at UCLA, and my co-founder, Beju, and I put all of our belongings, including some servers, into the back of my Infiniti Q45. We couldn't afford to move with movers, and also plane tickets were quite difficult. So we drove across the country to where you're sitting now, New York City, and started our first company. This was a high-frequency trading firm in the absolute middle of the global financial crisis, where everyone was telling us that that was the worst time that you could possibly start, not just any company, but a financial services company. But the industry changed. There was a lot of disruption. Institutional finance went from kind of open outcry trading on the floor to completely digital. And then this sort of like set the seeds for us launching Robinhood many years later, where we basically combined the technology of high frequency trading with the new platform shift of mobile, and became the first mobile-first zero commission financial company.
Do you still have the car? It's a bit of a historic thing, almost like the IBM Garage or whatever that was?
No, unfortunately, I don't have the car. It stopped running right around 2013, and then I sold it for about $300. So someone got a great deal in Northern Virginia.
Vlad, one thing inherent to your story, and you and I have talked about this a lot the past 18 months, but really this year it is the product velocity over at Robinhood. It seems like every day I wake up, there's something new coming from you and your team. Help us understand how you're able to get some of these products to market so quick, and how are you identifying new areas to grow in the space?
Yeah, I think that we've been fortunate to have spent a lot of time over the past few years building great infrastructure, both on the technology side, but also great people, great leaders. And we try to move fast and do so safely, because we recognize we're a financial company, and you want to make sure that customers have a reliable service. But I think we've been able to move fast while making sure that we do so safely, and it just requires having the right talent and the right technology infrastructure, which we continue to invest in. And it's not always the sexiest thing to talk about, but there were a couple of years, 2020 and 2021, where we didn't ship too many products, but instead we really got our house in order and built the foundations for the company you see today.
What's been the biggest game-changing product for Robinhood this year?
Well, I'd say the last quarter, we announced that we had record net deposits. So 20 plus billion in net deposits in the quarter into the platform. And we already surpassed last year's record of net deposits with another entire quarter to go. We also announced 11 business lines, up from 9, that generate 100 million plus in annualized revenue run rate. The 2 new ones are Bitstamp, which is our institutional crypto exchange that crossed into the 9-figure revenue run rate, and also prediction markets. Prediction markets, which we've talked about, our fastest growing business of all time from a revenue standpoint, doubling quarter after quarter. And we also announced so far in October, we've traded more contracts at about 2.5 billion than all of Q3 put together. So that's been ramping extremely quickly. So I think I'd have to point to that one as the fastest growing. That's on the active trader side. But again, you look on the wealth building side, where we're not just building for active traders, but we want to be your primary financial account and your secondary financial account. You mentioned financial super app. Banking's looking really good. Credit card has ramped to north of 500,000 cardholders incredibly quickly, which makes us one of the fastest growing in that space. And Robinhood strategies in retirement have been ramping as well. So I'm proud of how the team's been able to build for these very different customer bases, active traders on one hand, but also becoming the platform that can help all of our customers, the mass market, with the totality of their financial needs.
Vlad, here's what Bernstein just said about Robinhood after your quarter. Quote, quarter after quarter, Robinhood management raises the bar and tells us why the stock deserves its valuation. How do you model a company that adds a couple $100 million revenue businesses every year? How could an investor model a business like yours?
Well, I think that we try to give our investors really leading visibility into how things are evolving. And as you could probably tell, even the way we're communicating with investors is evolving and improving. So it was less than a year ago that we did our first video earnings call, for instance, and we've improved upon that experience. The last earnings call was not only on video, but we had live video question asking from retail customers. We had sell side, buy side, and the media in the room. And it was in the Chase Center in San Francisco. So we actually did it at an interesting location. So the communication with investors, I think, has been improving, and it's a product in and of itself. In terms of the financial profile of the company, we keep it very simple. We want to grow revenues faster than costs. It sounds simple, but it's actually not trivial to do, especially at high scale. And we make big bets. You know, we're not only content to improve the products we have incrementally and get a little bit better, even though that's very important, but we also make bets on new categories that you don't see elsewhere. And that led to innovations that are relatively unique to Robinhood in our space. For example, 24-hour markets on the active trading side, cash delivery, which you mentioned on the banking side, the deposit match products, which still continue to be unique, and of course, prediction markets as well.
You know, I see a lot of what you're doing, Vlad, really trying to connect with the retail investor this investor has become way more sophisticated. Yet I look out through corporate America more broadly. I don't see a lot of companies doing video calls from the Chase Center for their earnings days. I mean, nobody's doing this stuff. Does that frustrate you? They're not taking the retail investor seriously.
Well, I'm seeing a ton of progress on this front, actually, and I'm working hard to make it easier for companies. I think you have to remember, most companies, when they think about their business, you know, dealing with retail investors is pretty secondary or ancillary. They're worried about, you know, making sure that they're launching products, and they treat investor relations, particularly retail, as kind of a chore or something they're forced to do. Our business is inherently different. Retail investors are at the core of not just our investor base, but also our customer base. And so we're kind of in a better position to take the lead here. But just last week, Opendoor, for example, became the first company outside of Robinhood to use our infrastructure to live stream their earnings to their customers. And we've had lots of others reach out. So you should expect that to be a growing trend in investor relations in the future. People are seeing what we're doing, and they're seeing that it's resonating with retail, and they like to explore and up level as well. Even you look at our IPO access offerings. When we pioneered IPO access to retail back in 2021, we were met with a lot of skepticism. You know, people would say, of course, Robinhood would do it. You're Robinhood, but why do I have to share a chunk of my IPO with retail? That seems like a bit of a strange thing. But now, after 3 years, 4 years, pretty much all of the major IPOs are in touch with us, and they're talking about how can they level up their retail engagement. And you've seen that reflected in larger allocations and better selection for customers. So I think it's a wave that's going to continue, and we're going to continue to do what we can to make sure retail is a first-class constituency for every public company.
You came out earlier this year, Vlad, with some very strong or robust long-term oriented growth plans in terms of numbers within those numbers. But since then, you know, the crypto industry, it has even become more mainstream. The growth in these businesses, whether it's Bitcoin, various coins, have gone through the roof. 10 years out, how big is your crypto business?
Well, so right now, crypto at Robinhood is largely driven by spot crypto trading in the US. And it's, 20 to 25% of our overall revenue. I think the interesting thing is that crypto and financial services are going to fully merge over time. And that's kind of the bet that we're making. So traditional assets, right now we make a very clear distinction between our equities business, our options business, our futures business, and crypto. And also, cash management, banking, and credit card are separate. But more and more of these business lines are going to see crypto technology permeating their very fabrics. So you're going to start to see banking-like products that are stablecoin powered. And there's going to be some ambiguity about whether that's a crypto business or a TradFi business. But as the two fully merge, I think it's going to be a little bit more difficult to cleanly separate. I think it's going to become bigger and relatively indistinguishable from traditional finance, particularly as tokenization technologies continue to develop and become more mainstream.
Over the long term, Vlad, what business becomes bigger as a part of Robinhood? Is it crypto or is it prediction markets?
I think those businesses too are not going to be distinguishable. I mean, you look at prediction markets ex-US, it's generally on crypto rails. And in the US, where you have CFTC and NFA, they're being offered via traditional means. I think what's going to happen is outside of the US, the dominant way to invest or get exposure to US assets and later on global assets is going to be through tokenization and crypto technology, like you see with our EU offering. And then the US eventually will upgrade on the back end, but I think that it'll likely be a little bit behind just because we already have that existing infrastructure that's serving customers well. And I think that if you look out 10 years, we'd like to build a company where more than half of our revenue is ex-US, and sliced another way, more than half of our revenue is institutional rather than retail. So I think there's a ton of growth left in crypto, and also as it continues on an infrastructure layer with things like decentralized exchanges, perpetual futures, tokenization, as it continues to develop and mature, you're going to start seeing crypto eat the traditional financial system and continue to become integrated at a base layer.
Let's bring in Yahoo Finance's Ali Canal from the Invest Social Center with some viewer questions for Vlad. Ali, take it away.
Thanks, Brian. And yes, Vlad, we have plenty of questions from our Yahoo Finance social media viewers. Kicking things off from user Hedge Vision, who asks, do you have any other perks in store for the Robinhood credit card?
Oh, we have tons of perks in store. So again, we want it to be the best experience and in line with what you'd expect from a private banking relationship. So if you are one of the 500 plus thousand cardholders for the Robinhood credit card, you're seeing great rewards, industry-leading cash back across all categories. And as banking rolls out, you'll see great travel benefits, an amazing travel portal, and I encourage you to check it out because more and more is coming on a monthly basis.
All right, so watch out for more there. And we have a two-parter here from AB. First question, as the entire world continues to shift towards AI, automated workforces, and robotics, do you see that as a threat to more traditional brokerage firms such as Schwab and Fidelity? And how is Robinhood positioned to be a winner in that space?
Yeah, that's a deep question. I think there's two views, two schools of thought about the impact of AI on society. One is that it's going to create lots of new jobs. So certainly there will be job disruption, but you'll see new jobs and job families and a flurry of entrepreneurial activity. That's the one that I happen to believe in. The other one is that the other view is that it's going to lead to greater and greater centralization, and maybe the handful of frontier labs that are building these models are going to aggregate more and more of the value, and they're going to try to build products and engage in enterprise deals that basically displace workers. So that's sort of like the bleaker view. I think regardless of which one of these you believe in, becoming an investor and getting exposure to the markets and AI companies in particular is going to be very, very important. And that's why we're pushing so hard on retail access to private markets in the US through various means. We think that it's going to be important for people to be owners in this AI technology in order for them to support it and defend it. Because AI right now, deeply unpopular. People are afraid of AI job disruption and how it's affecting their families and their livelihoods. I think a big part of that is they don't have skin in the game. You know, they're worried AI is going to take their jobs and give them nothing in return. And we're very focused on solving that problem in doing our contribution to solve it, which is giving private markets access to retail investors, particularly in AI companies.
Yeah, and we have been talking about AI all day. And then finally, for part two, with the great generational wealth transfer underway, how is Robinhood prepared to capture and manage these assets as a fully online platform?
Yeah, and that's a great question. So one of the benefits, one of the things that we're testing out and really leaning in with Robinhood Banking and the credit card in particular, is a first-class family experience. So we want to make it easy to bank, not just yourself, but your partner, your children, members of household staff that you might have. And that's really a first-class experience in our product, unlike other products. You should expect that coming to our brokerage and our wealth management products as well, to the point where it's going to get better for you when you have your whole family on board. So a lot of people think, well, Robinhood is just banking on young people to inherit all the wealth. That's not true. I think Robinhood is an amazing place for folks in their 70s and 80s even to keep their money and their investments. And we offer these amazing match promos. So imagine, you're someone in your 60s, maybe you're 5 years away from retirement. You might have $10 million in your retirement account. Well, when we run a 3% match promo, that's $300,000 that's instantly credited to your account, which is a very, very strong value proposition, particularly the older and wealthier a customer is. And we find that as long as you're digitally savvy and you're comfortable with using smartphone and web-based technology, our customers get served very, very well, regardless of age.
Vlad, before we let you go, I was just talking to Max Levchin over at a firm, and I asked him, what does he do to de-stress? I mean, these are high pressure cooker gigs. He told me he's a competitive cyclist. What do you do when you're not doing Robinhood? Like, what's your release point?
I like to go into the sauna. The sauna is sort of my de-stress zone. And it's quick, 15 minutes, a couple of times a week. It's very nice. And the great thing about it, you can't take your phone in there. If you take your phone, I've tried, it's about 5 minutes before it melts down.
Vlad, please be careful. I want to continue to talk to you into 2026. Just be careful, dude. Good to see all the stuff you're working on over there at Robinhood. I appreciate you coming to invest. Thank you so much.
Thanks, Soz. Good to see you.
Thank you. Michael, so good to see you right off the jump here. Look, we had Bitcoin hit a record high just a few weeks ago, $126,000. We've seen this pullback here over the past few weeks. I look at strategy stock down about 27% over the past month. Are investors losing faith in the Bitcoin movement?
No, I don't think they're losing faith. If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. So if you want max performance, you're going to take max volatility. Strategies up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. The vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s. And you get a mixture of a dividend and principal protection and some of the upside of the common equity. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. STRC is meant to be very, very stable, around $100 plus or minus a few pennies. And you get like a 10 and 10.5% dividend, that's tax deferred, and you're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave.
Michael, and as we've gotten more instruments to ride the digital wave, particularly as people have had more and more ways to directly invest in Bitcoin, strategy stock has not done as well. To your point, it has over the past several years. But again, if you're talking about getting in now, or if you got in earlier this year, you wrote it down even as Bitcoin was going up. Are you concerned at all that the crypto treasury, the digital asset treasury strategy that you pioneered is losing a little bit of steam?
Over the last year, there's been 100 companies that have added Bitcoin to their balance sheet. The derivatives market and IBIT has surged. The flows into the ETFs have surged. All the major banks have announced support. The accounting has dramatically improved. The tax regime has improved. The administration support at the SEC, the CFTC, the Treasury level has improved. And so, and the technology has improved. Companies like Block have rolled out support for Bitcoin on Square and Cash App. So, all the fundamentals are good. If you're going to be an equity investor, you have to think for yourself, and you have to have a time horizon of 4 years or longer. And equity markets are either going to lead or lag, and occasionally they'll perfectly reflect reality, but generally it's only a few days a year when they'll be perfectly rational. So if you don't have that 4-year time horizon, and if you don't want to make decisions based on fundamentals, if you simply want to park your money in a stable instrument and pick up a stable yield, you should be a credit investor. You shouldn't be an equity investor. I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago that you've now got an extraordinary risk-reward opportunity. Now is a much better time to invest. You know all the things that you wanted to happen have happened. the market sentiment is negative, but that's an opportunity for the equity investor that makes their own decisions.
Michael, you're seen as a pioneer in this industry, charting new territory in cryptos and Bitcoin. What do you think about the likes of a Jim Chanos and others like him that are trying to profit off of you not doing so well?
I don't really think about Jim Chanos. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit is got a tax equivalent yield of 4 times higher than bank credit. You can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. So I don't really focus on them. Nothing great has ever been created by a short seller.
Michael, you've referred a couple times to this new digital asset credit that you guys have developed, STRC Stretch. It's a preferred security that, as you mentioned, pays out 10.5% in yield. And this is also a way for you all to not necessarily issue more stock in the underlying equity in order to pay for buying more Bitcoin, and therefore maybe not diluting those underlying shares as much. But how far do you think you can take that as sort of a funding mechanism for your Bitcoin strategy?
Well, I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury-type instruments in the United States. Stretch is about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid-40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1, and then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% and a taxable coupon.
Michael, of course, we're having this conversation the day after the government shutdown officially has ended. Things have to restart up again, but still record-setting shutdown. What did you think about the length of the shutdown, and do you believe it reinforces your long-term view on Bitcoin and various other cryptos? Because look, at the end of the day, record-setting shutdown, I mean, how can you have trust in the dollar?
Well, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy 1 Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever.
Michael, do you think, in light of the shutdown, that investors have lost faith in our country?
No, I don't think they've lost faith in our country. I think the country's going to do just fine. This is a hiccup. It's not our finest moment, but right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that a billion AIs are going to think a billion times faster than us human beings. You can see a world where a billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So in a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off.
Michael, is there a risk that some of those robots or perhaps quantum computers combined with generative AI, that they crack Bitcoin, or that they think of something better than Bitcoin and it becomes obsolete?
No, I don't think there is a risk. I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded.
I was going to say Tim Cook's sending you a check in the mail, but I guess now Microsoft and Alphabet have got to send you a check too, because you mentioned all of those. Let's talk a little bit about the bigger market because of the AI advances that you're talking about. You know, you're very familiar with the dot-com bubble, right? Because you founded MicroStrategy in '89, you went public in '98. I was looking at the history of the stock chart here. You went public at $12 a share. The stock at that time spiked as high as $313 in 2000. And then crashed down or remained below 20 until you initiated your Bitcoin buying strategy. I'm curious, you know, as you look back at that crash, what that taught you and whether you see any parallels today. Obviously, you're aware of the big bubble debate going on right now.
I think it teaches you to focus. Don't overextend. You might have 10 good ideas, but you're better to focus upon your one idea and to commercialize the one idea. It also just reminds you that no matter where you are as a corporation, you can always improve the company's outlook, and you can improve and create shareholder value by harnessing the next wave. People wrote off Apple for dead. I mean, Michael Dell famously told Apple to shut down and give the money back to the shareholders back around '97. And then Steve Jobs returned and he harnessed the internet, and then he harnessed MP3 files and digital music in order to revive Apple, and then eventually created a crazy thing called the iPhone, and it became the most valuable company in the world. I think history is replete with examples, you know, whether it's the internet or whether it's AI chips, people. people wrote off GPUs as being irrelevant, and all of a sudden we have the ChatGPT moment. The Bitcoin miners were struggling, and then AI explodes, and now everybody wants their energy. I think that digital intelligence, digital assets, digital capital are creating the most compelling opportunities for corporations in the world today. I think the important thing is to use them the right way. For example, we used AI in order to design those 5 digital credit instruments. So people ask, how do you make $1 billion with AI? Well, we created $8 billion with AI just by designing new types of securities. Yesterday, STRC traded $175 million. It's the most successful preferred stock in the century, maybe ever in the history of the capital markets. It was designed completely with AI. It's 100 times better than a good preferred stock. I would encourage anybody with any corporation to think about how you turbocharge your company by using digital assets, digital currency, digital capital, or digital intelligence. There isn't a company that you can't improve using technology in the year 2025.
Michael, later on in the program, I'm going to be sitting down with Eric Trump and Asher Ganoot. They're, of course, working American Bitcoin and Hut 8 mining those operations for American Bitcoin. And I know they're very focused on power generation. As you look at your long-term outlook for Bitcoin, other cryptocurrencies, how concerned are you that this country can't produce the power it needs to meet the demands of cryptocurrency?
I think the company got a wake-up call. Back in 2020 and 2021, I talked to a lot of power companies and energy companies, and they were about to decommission all their nuclear reactors. We were staring at all the nuclear reactors getting decommissioned, and there was a movement to shut down nuclear energy in this country. And of course, in Germany, they shut them all down. From early 70s, 73, all the way till 2023, the nuclear industry was persona non grata, and it was politically incorrect. And I think the explosion of AI, and when people started using these AIs and realized they're actually quite useful and they're transformational, it created a reconsideration and a political shift in the United States. The Overton window shifted. And as soon as Google and Microsoft and Apple and Amazon realized they needed energy, nuclear became cool again. And we flipped from 50 years of not wanting to build power, whether it's nuclear or natural gas was out of favor too. People wanted to shut down natural gas. All of that changed in the past 2 years. And now the political sentiment in this country is we should develop natural gas, we should develop nuclear power. And of course, we're only about 1 to 2 years into that sentiment shift. But I have confidence that the United States is going to move from a laggard to a leader in the energy generation business, because now we see we need the energy to drive our cars, we need the energy to power up our robots, we need the energy to think 1 billion times faster, 1 billion times quicker, and we need the energy to defend our digital assets like the Bitcoin network. And the only thing that was lacking was the political will, and I think that has flipped 180 degrees. There's bipartisan consensus. There's not even a debate right now about whether we should generate more energy or build more power plants. 4 years ago, you couldn't have done it. And so I think we've been saved by the explosion of digital intelligence and digital assets in this country. It'll be good for the nation. It'll be good for the world.
Michael, obviously, you're a serious guy, right? We've talked a number of times. You think very deeply about all these issues. But then sometimes I look at your X account and I see you posting or reposting these various sort of digitally generated images, AI generated images of yourself. They're a lot of fun, right? Of you, we're showing one of you in a top hat, various Bitcoin paraphernalia, superheroes, etc. I'm just curious how you think about that. Is that, is your Bitcoin, advocacy, is there an element of shtick to it as well? Are you having a little fun with it? How do you think about all of that?
when I was growing up, there were 3 channels on television, and they turned off the television, the signal at like 11 o'clock at night or midnight, and for 8 hours there was no programming. There was no internet. We didn't have, today, we have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in a TikTok hole, an Instagram hole. You can get on stream and Twitch. We have managed to manufacture infinite everything. It used to be you had to have money to get a newspaper or a magazine. And now you can see we live in a world where we have, to say 1 million times more content would be probably an understatement. So the entire society is being inundated with information, and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience. If it took 1,000 words, show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels 1 million times faster, that is 1 million times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? Literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to 1 sentence, 1 tagline, or 1 picture? Because I'm like, show me the picture. Okay, got it. Now I can move on with my life. Thank you.
You're making a lot of sense to me, Michael. Stay with us for a second. Let's bring in our social correspondent for the day, Yahoo Finance's Ali Canal, with some of what she's hearing from our online audience during this interview. Ali.
Yeah, well, Brian, Michael Saylor just talking about infinite content on social media, which is the perfect segue since we are talking and taking your questions on social media. Plenty of viewers chiming in, and starting off with a strong one here, Michael. First question, do you see Bitcoin catching up to and surpassing gold's market cap by 2035? What say you?
I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
And another social viewer wants to know, why should an investor buy strategy stock instead of a Bitcoin or spot ETF?
Yeah, if you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform your money market. You might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, in a month, in a quarter, in a year, and you don't have to, worry about the roller coaster.